The RSI indicator, when used correctly, can be an extremely powerful tool. However, there is a common and big mistake that so many of us traders make, and I see it time and time again. The tempting yet misleading trap of wanting to buy when the RSI is below 30 and sell when the RSI is above 70. This classic oversold and overbought interpretation can seem logical on the surface, but it can be devastating to your trading portfolio. In this video, we will help you how to use the RSI indicator correctly. We will look at what the RSI actually tells us about the price. We'll take a look at the best RSI settings, and we will also take a look at a few RSI trading strategies that professional traders use. And in the end of this video, I will also give you a few tips and tricks. So yeah guys, I really think and hope you will find this video valuable, and without further ado, let's jump right into it. So first of all, before we learn about RSI trading strategies and how to use the RSI indicator correctly, it's important that we are on the same page and understand what is the RSI indicator. The RSI indicator is this indicator here on the bottom of the screen, and it oscillates or moves in between 0 and 100. But what does these numbers actually tell us about the price? Well, the RSI measures something called momentum, and you can think about momentum as the speed or velocity of the price movement. So if you, for example, take a look at this move right here on the gold chart, you can see that during this time the price moved very fast towards the upside. And this we can see on the RSI indicator. You can see that during this period, the RSI showed very high values. At this highest point, we had a value all the way up at 89, and 89 is considered a very high value. And the opposite is also true. If you take a look at this price movement right here, you can see that we had a period when the price dropped down very fast, and this will show up on the RSI indicator. You can see that during this drop, we had a very low value of 21, indicating that we have a strong downward or bearish momentum. If you are a little bit familiar with the RSI indicator, you have probably heard of the terms overbought and oversold. In general, when the RSI indicator is above 70, you can see that this line right here is the 70 line. When the price is above this line, we say that the price is overbought. And conversely, when the RSI is below the 30 mark, which we have right here, we say that the price is oversold. And one very common mistake when it comes to the RSI indicator is to try to sell or short simply because we have an overbought condition, or to try to buy simply because we have an oversold condition. To demonstrate this, let's take a look at the price action right here. You can see that the price is in a strong move here towards the upside. We have a strong upwards momentum, and this can be seen on the RSI indicator with a value of 78, so a value above 70. And let's say that you use this signal right here to bet against the market, or in other words, bet that the market will go down. As you can see, in this case, the price after the signal just continued to go up, and if you took a short position right here based on the RSI, this could have led to a devastating loss. So I really hope that this example demonstrates that a high value on the RSI indicator does definitely not mean that the price will reverse. Now when you understand this concept, we are ready to take a look at our first RSI trading strategy. I will go over exactly how to do it in a step-by-step manner, and this strategy is super useful, but it can be a little bit tricky, so make sure to really pay attention now. The first thing you want to do is open up a chart. Right now we are once again looking at gold and on a daily time frame, and this strategy works on pretty much all time frames, so you don't have to worry about that. But the very first step we want to do here is that we want to go up to our indicators tab here. We press indicators, and of course we open our RSI indicator. Just search for RSI and press here on relative strength index. Now when you have your RSI on the chart, you want to go down here to the bottom left corner and you want to press this settings tab right here. And then you want to go here to the style tab, and you want to go down where it says RSI based moving average. And this option you actually want to uncheck. This one is basically a moving average of the RSI. And the reason we're unchecking this option is because we don't need it for the trading strategy. And the moving average just makes the indicator harder to read, at least in my opinion. So you want to make sure to uncheck the moving average. For me personally, I usually also want to change the color of the line to orange. I think that one is the most visually appealing. And I also increase the thickness by a tiny bit. When we're done with this, we press OK and we are ready for our strategy. The next and very important step for this strategy is that we want to find a divergence between the price and the RSI indicator. In this particular case, we're looking out for a regular bullish divergence, and that basically means that the price should be printing lower lows while the RSI should be printing higher lows. So let me repeat, we want the price to print one low and then a lower low, while the RSI prints one low and then a higher low. To show the divergence, I usually go up here and just use a simple trend line, and I mark the lower lows here. Let's use, for example, purple to mark this divergence. So let's mark the lower lows with purple right there. And as you can see, the RSI prints higher lows. When we have lower lows on the price and higher lows on the RSI indicator, then we have found our regular bullish divergence. But a divergence is not enough to justify a trade. It's highly preferable to have other bullish variables or indicators that makes this trade more likely to succeed. You can, for example, use chart patterns. Later on in this video, we will take a look at the classic double bottom pattern and how we can use the RSI to make that trade better. But you can use, for example, chart patterns, support and resistance, or candlestick patterns. But in this case, let's actually look a bit to the left here, because as we can see, this level right here have actually historically been acting both as support and resistance. You can see we can draw a line right here. You can see that from all the way back right here, we saw this level acting as support. We saw this level acting as support once again. And one can also argue that this one acted as resistance, support. So as you can see, this divergence is appearing at a historical support. So now we know that we are both on a key support level and we also have the bullish divergence. Last but not least, we have a candlestick pattern right here that is called a piercing pattern. So we have bullish divergence on a support level, and we also have a candlestick pattern. This is definitely not the strongest candlestick pattern, but we still have 3 bullish variables, and that is enough for us to enter the trade. Our stop loss, we want to set below the lowest point of the low. So you can see that we set our stop loss below the lowest point of this low. And to keep it simple, I usually aim for a risk to reward ratio of 2, which basically means that this part right here is twice as long as this part right here. So we win 2 times more than what we lose if we lose the trade. And as you can see in this example, we did get a bounce at our support level. This one came after a bullish divergence, and we locked in some nice profit. The next strategy I want to talk about is a strategy where we use the classic double bottom pattern together with the RSI indicator. So once again, you want to make sure that you have your RSI indicator open and that you have the same RSI settings as we had in our previous trading strategy. The next step here is to find a double bottom, and a double bottom is a pretty simple pattern. You basically want to find one low and then you want to find another low at the same level. The second thing you want to do is that you want to go up here and you want to open up your horizontal line, and you want to draw a line here at the high point, which is in between the 2 lows. So the pattern basically looks like a W. You can see we have 2 bottoms like this. And now you may wonder, how does the RSI play into this pattern? Well, what we want to look out for on the RSI, this is pretty similar to our previous strategy, is that we want to see the RSI print one low and then a higher low, while we at the same time are seeing this double bottom pattern. However, in this case, our entry signal is not down here. For the double bottom, we want to wait for the price to break above this purple line or to break above this high right here before we enter the trade. So let's zoom in here and take a close look. Which candlestick broke this pattern right here? Well, what we want to see is that we want to see a strong candle close above this line. You can see that this candle right here, yes, we did close above, but preferably we want to see a stronger candle close above. So in this case, I would wait for one more bullish candle. This is what we call a confirmation candle before we enter the trades. So I would enter the trade right here on the candle close of that candle. As for your stop loss, if we have a low coming in before the breakout, like we have right here, then this is usually where I set my stop loss. So I set my stop loss just slightly below. You can see just slightly below this low point right here. And as for the profit target, the most common method is that you measure from the highest point of the double bottom. You take this measurement down to the low, and then you take this exact measurement. I press Ctrl plus C and then Ctrl plus V, so we get this exact length. And then you take this measurement and you measure from the breakout point. So usually I set my target somewhere around here. The profit target and stop loss can vary a bit depending on your trading style, but this right here is how I would do it. So in this case, we actually have a closer to a 1-to-1 risk to reward ratio. And as you can see, in this case, it took quite some time. The price actually went down and tested this previous resistance as support, but after a few more candles, we went up here and we reached our profit target. Now guys, I want to talk about my RSI bonus tip number 1. And that is to go up here to the RSI settings. So we press on this cog right here. And if we go down here to where it says source, you can see that it says close right here. And this right here is the default setting of the RSI. And what this means is that the RSI indicator is calculated based on the closing point of the candle. So for example, if you take a look at this red candle right here, the RSI indicator is calculated based on the lowest point or where this candle closed. So as you can see down here, we got a very low spike on the RSI. But for the next candle, for this green one, the RSI indicator is calculated based on this point right here, the candle close of the green candle. So you can see that the RSI went up by a lot during that point. But let's go back here to the settings once again. The tip here is that if you want a more sort of smooth RSI indicator, you can actually change this setting to where it says OHLC4 right here. So let us press that one. This one we basically change the RSI indicator so it takes into account both the opening price, the closing price, but even more importantly, it also takes the highest point and the lowest point of the candles into account. So this is a more sort of, you will get a more smooth RSI indicator if you use this setting. And many traders actually prefer this. So let's press OK right here. The RSI indicator will be a bit more smooth here. And some traders prefer this setting because it takes out some of the noise. You can see that, for example, the double bottom strategy we recently talked about, you will still get pretty much the exact same signals, but the RSI indicator will not be as spiky. It will be more smooth. My bonus tip number 2 for this video is actually a divergence indicator that you can use here on TradingView. And to open up that indicator, you go up to the indicators tab, and I believe you just search for divergence here, and you basically press on the divergence indicator. The great thing about this indicator is, as you can see, this one will find both bearish and bullish divergences for you automatically. Let's take a look a bit to the left here. You can see the indicator, for example, found the divergence we talked about earlier in the video right here. We had one low and then a lower low, and as you can see, the indicator automatically found this divergence because this indicator is based on the RSI. However, one thing I do want to warn you about regarding this indicator is that it will not find all the divergences. For example, the double bottom pattern we talked about, you can see that this indicator did not find this divergence, and that is probably because when it comes to the double bottom, we have one low and then another low at the same level, right? While the RSI printed one low and then a higher low. So if you want to, you can definitely mess around with this divergence indicator. In general, it's a good indicator and it will find most of the divergences. But yeah, whether to use that indicator or not will depend on your own personal trading style. Personally, I prefer to find the divergences myself so I can spot trading opportunities such as this double bottom right here. So the RSI indicator is one of my favorite indicators because it's simple but at the same time powerful. Another indicator that I love is the MACD indicator. So now I highly recommend all of you to watch this video about the MACD indicator next.